Okay, Assalamualaikum warahmatullahi ta'ala wabarakatuh. We meet again. I'm Dr. Lizz, your lecturer. So today we are going to look at a new topic, the format of financial statement, especially for the students who are taking the financial accounting subject. So if you are still not familiar with the format of financial statement, then today let's have a look at this topic. Okay, so now this is the format of the financial statement that you will need to do when you have already prepared your trial balance. So I am sure that you have already done the trial balance. That is, to be able to do the financial statement, you must already be able to prepare the trial balance when you are given a set of transaction. Okay, so once you have prepared the trial balance, now the list in the trial balance, we are going to use that to prepare the financial statement. So financial statement consists of two. Number one is what we call the statement of profit or loss. But of course, if you can see this, we must start our statement with the name of the business. Make sure you write down the name of the business at the top of the statement here. Okay, don't forget to write this. And then after that, we start with the name. Statement of financial profit or loss for the year ended. Don't forget to write down the date here. What is the date that you need to prepare the financial statement? Normally it is the end of an accounting period. For example, on 31st December 2019 or 30th June 2019. Okay, so write down the date here. So the format will look like this: the name of the business, the statement of profit or loss for the year ended 31st December 2019, for example. Okay, so this is the first type of financial statement that you have to do, that is statement of profit or loss. In short, we call it SOPL. Okay, now so let's look at the columns first. So you can see that we have 4 columns here. This is the first column here, the second column here, the third column here, and we have the fourth column. So why do we have so many columns? So these are actually meant to do different things. Okay, don't get confused with the many columns that we have. Okay, let's see. First, we start with sales. This is our sales. You look at your trial balance, then you can see how much sales do we have. So sales will go straight to the last column. Okay, we'll go straight to the last column, and then we will adjust whatever items that will reduce our sales. For example, the written outwards. Remember that written outwards is actually the contra item that will reduce your sales. Okay, so written inwards will need to be minus from your sales. And similar is the discount allowed. Discount allowed is also another contra account. So this will also reduce your sales. Okay, so that's why you take it to the last column here under sales. Then you are going to minus with sales so that you will get the net sales. So the last column here is supposed to place whatever figures that doesn't need further calculation anymore. Okay, so you have the net sales here. So this is your sales that has already been reduced with whatever that contra accounts that you might have. Okay, settled. First part. Then as you can see here, we have the second part, the blue part here. Okay, this is where we are going to calculate our cost of goods sold. Okay, cost of goods sold, the cost that you have to incur for all the sales that you have already made during the period. We start with opening inventory. You can see in your trial balance, opening inventory, the amount is given in the trial balance. Okay, so opening inventory, you take it to your third column here. Why? Because this is the figure awaiting the net purchase that you are going to calculate in the second column here. So you just put this one here. Okay, there's nothing that you need to do to the opening inventory here. No adjustment to this figure. Okay, and then our next figure, our next format says that you have to calculate the purchase. Okay, there are just quite so many items here that you will need to adjust it with purchase. So you look at your trial balance and you look, this is your purchase. Put it on the second column. Less written outwards, discount received. As you can see, written outwards and discount received are also the contra account, similar to written inwards and discount allowed. These are the contra accounts to sales. However, written outwards and discount received are actually the contra account to purchase. That is the accounts that is going to reduce your purchase. So that is why you are going to minus it from purchase here. So you just minus it here. Okay, so we are not done yet. We look at any expenses on purchase that you might have already incurred. What are they? They might be the carriage inwards, the transportation cost that you need to incur to bring the goods purchased into your premise. Okay, duty on purchase that you might have paid, insurance on purchase maybe that you have paid for your purchase. So any expenses related to purchases must be added to purchase and will be considered as part of our purchase. Okay, so you get purchase minus with written outwards, discount allowed. You add with this kind of expenses and then you will get one figure which what we call the net purchases. So net purchases here is the amount that you are going to add to the opening inventory that you already have it ready right here, remember? Okay, so opening inventory plus with net purchases, then you're going to have one figure here. This is what we call cost of goods available for sales. So that for that particular 1 year, this is the amount that you have spent for goods to be sold. The amount of opening inventory that you have, and then the cost of purchases that you have already incurred. So you have, this is the cost for you to sell the goods. Okay, however, not all goods that you have available for sales will be sold, because at the end of the period there must be something left in your shop. And so this is what we call the closing stock. And this closing stock needs to be minus from the cost of goods available for sales, or chogas here. So when you minus with closing stock, you will have the cost of goods sold. Okay, so this is the cost of goods sold, the one that you aim to calculate in the beginning. See? Less cost of goods sold here. So this is the cost of goods sold that you will have, and this is the amount. So this is actually the cost that you have to incur for that particular period in order to sell the goods that you have met here. Okay, you have met here. Okay, so net sales that you have already calculated minus with the cost of goods sold right here, then this is the figure that you have, which represent the gross profit. However, if you get the loss, it means that your cost of goods sold here is higher than your net sales, then you will have the gross loss. Okay, so you need to put a bracket here if it is a loss. Okay, but let's assume we have a profit, gross profit. So this is your gross profit. How do you get your gross profit? It is from net sales minus COGS. Okay, and how do you get your COGS? As you can see, this is the calculation of COGS. Opening inventory plus with net purchases less closing stock. Okay, so that will give you the gross profit. Okay, so now we have reached the first part of our statement of profit or loss. Now we want to go to the second part, which is to calculate the net profit, because this is our aim actually, to calculate the net profit. Okay, so what do we do from here? Gross profit, you add with other revenues. What are other revenues that you have received during the period? For example, you might have rent out some of your shop space and then you will receive the rent. So this is the rent received. And then you might also receive some commission when you have sold some consignment goods. Okay, or you put your money in the bank and you receive some interest. So this is the interest received. Remember that discount received is not part of our revenue, okay? Because discount received is actually our contra account, which will reduce your purchase. Okay, so from these three accounts here, you will get this total. Okay, so you just bring it to the next column, the last column here, and just let it there for a while. And then after that, we look at the next section, the one that I have highlighted in orange here, which is this will need to be less with operating expenses. Remember, operating expenses, the OPEX, all the expenses that you will need to incur in order to operate your business. So what do we have? We have the salaries and wages that you need to pay to your employees. We have the insurance that you have to pay for the business, advertising, carriage outlets maybe, rent expenses, interest on loan, the bad debts, the water and electricity, depreciation expense, general expenses, repairs and maintenance, and you list everything here on the third column. Okay, so you can see these are the list of the expenses for the business. This is the one that you have from your trial balance. Okay, every expenses, operating expenses besides the one that has already gone to your calculation of cost of goods sold, it will appear here in your statement of profit or loss. Okay, so once you total up, you will get this amount, and this is the amount that you are going to minus from your gross profit. So gross profit add with other revenues minus with operating expenses, that any amount left will be your net profit. And remember, if your gross profit here plus with other revenues is less than your expenses, then here you will get what we call the net loss. Okay, so this is the first part of your financial statement, which is the statement of profit or loss. So as you can see, what come to this statement? Number one is your revenues. Okay, and this is still your revenues. So any accounts that fall under revenues will come to your statement of profit or loss. Another part is all your operating expenses. All your operating expenses will appear here. So out of 5 classes of accounts that you have learned, 2 groups will be in statement of profit or loss. So we still have another 3 in our groups of accounts, which are asset, capital, and also liabilities. So where do they go to? Okay, so this is where we have our next one, which is Okay, so now we are going to look at the second statement that you will need to prepare for your financial statement. This is the second statement, the one that we call as statement of financial position. Okay, so just now we have statement of profit or loss, but this time we have statement of financial position as at 31st December 2019 maybe. Okay, so as you can see, even the format of the statement is also different. Just now we have statement of profit or loss for the year ended 31st December 2019, but this one we have statement of financial position as at 31st December 2019. Name of the business, of course, will still appear up here. Don't forget this. And then, can I change it following the statement of profit and loss for the year ended like that? Absolutely no. Okay, don't even try to do that. Just follow this one. There will be marks here for you here. If you don't put this, then you are going to lose the mark. Okay, so what do we put here? Remember that in our SOPL, statement of profit or loss, we have the expenses, we also have the revenue. So there are still other three groups of accounts, which are assets, okay, owner's equity, and also liabilities. So this is where the other three groups appear in the statement of financial position. Okay, so we start with our statement of financial position with the assets. Okay, so we list down all the assets that you have, but then we will start with the non-current assets first. Okay, remember the non-current assets? These are the assets, the fixed asset that you cannot convert into anything else, that normally cannot move. Okay, so we start with this: the land and building, the motor vehicles, the office equipment, the machineries, the fixtures and fittings, or anything else that the question lists, or the items that you can find in your trial balance. Okay, now we start with the cost. How much is the cost will be given to you in the trial balance. If you have any accumulated depreciation, then we are going to list it here, and then you will get the net book value here. Okay, so when you total up, then this is the amount that we are going to use. Okay, not this amount, but the net book value here. Okay, and then after that, we have intangible asset will come close after the non-current asset. Okay, for intangible asset, assets that you cannot see with your eyes, you cannot touch. Okay, so we have, for example, goodwill, the patent, the trademark, the franchise. Okay, so you list down here and you get the total and you put it on the last column. So you can see, just like the SOPL, you also have 4 columns here. Okay, so and then the next one is the investment. Here we have investment or fixed asset. Fixed deposit. Okay, just remember that fixed deposit to appear here must be the fixed deposit that you have the maturity period of more than 1 year. If the maturity period is less than 1 year, then it will appear under your current asset. Okay, so investment of fixed asset, you just put it here. And the last one is the current asset. Current asset here, okay, for the current asset here, we have closing stock. This is the same amount that have appeared in your financial statement of profit or loss. And then the accounts receivable. The account receivable need to be adjusted first. You need to less it first with the provision for doubtful debt here. Then you will get the net account receivable. So net account receivable will need to be added to closing stock. And then we have whatever cash in bank that you have, cash in hand, and then the prepaid expenses, the accrued revenue. If you still have no items of these, or you have no provision for doubtful debt, then just take whatever items that appear in your trial balance. Okay, so when you have this figure, you need to total up with your investment, with your intangible asset, and then with your non-current asset. Then this will give you one value, which is the total assets. Okay, so this is your total asset. Okay, so remember there are 4 types of asset: non-current asset, intangible asset, investment or fixed deposit, and also the current asset. And these are the items that I already highlighted in red. Okay, and then after that, we look at the last item, which is the financed by. Okay, so you can see this is financed by. Okay, the next one, the assets here is financed by, okay, owner's equity. Means that all the assets that we have looked at here, it has actually been financed by our owner's equity. That is our own money, the owner's own money, okay, which constitute of opening capital about this much. And then if you have the net profit from our calculation of SOPL, if you can still remember, then the net profit or net loss will be taken here. Okay, if it is a net profit, you will need to add to the opening capital. But if it is a net loss, then you will need to minus it from the opening capital. Okay, less with whatever drawing that the owners have already done. Less here, because when you do a drawing, then it will reduce your capital. So opening capital plus net profit less with drawing, then that will give you the ending capital. Okay, so that's it about the capital. Then we go to liabilities. Our liabilities, as you can see, it consists of 2. The first one is non-current liabilities, and the next one is the current liabilities. Non-current liabilities here consists of maybe the bank loan, the long-term loan. These are the liabilities that are supposed to be settled more than 1 year, within more than 1 year. Okay, so we have long-term loan. We also have mortgage on premises here. So if you have any other items of liabilities that need to be settled within more than 1 year, then you can list down here under non-current liabilities. Okay, so you get the amount and take it to the last column. Then we go to our current liabilities. Our current liabilities normally consist of bank overdraft. If you have bank overdraft here, then you might not have this. Okay, you might not have the bank here, cash in bank here. There will be no cash at bank here because you have the bank overdraft here. Okay, so we have account payable or creditors. This may be your suppliers that you have not yet settled the payment, and whatever accrued expenses, the one that you have already used the benefit but you still do not pay, and also the prepaid revenue. Okay, so if you total up the ending capital plus with the non-current liabilities and plus with your current liabilities, then this will give you a figure here, and this figure must be the same as this figure, which is your total asset. If these two figures are not the same, then meaning that something must be wrong with your statement. Please go through again and see what is it that you have made the mistake. Where is your mistake? Okay, so these two must be the same figure. Why? Because we apply the double entry system concept, where debit must always be equal to credit. So the figure here must also be the same. Just also the same in your trial balance, where the debit will always be equal to credit. So that's it about our financial statement. So these are the 2 financial statements that we have learned. So I hope that you have understand this. Please do the exercise, because if you don't do exercise, then of course you will not be able to remember. don't think that you can do it without doing sufficient exercises. You will not be able to do it. Accounting needs intensive exercises. Okay, so students, that's all for now. So I wish you the best of luck. Do your exercises. So thank you so much. I hope that you enjoy the video.